And I do want to talk about the investment process, or at least the research process, Brett. You guys over at ARC, you have this whole scoring system of how to evaluate companies from a bottom-up perspective, obviously looking at revenue and profitability. But you also take a closer look at the people, the management, the culture of the company, board governance, et cetera. When you take a look at a company like Tesla, how does it sort of stack up on that main point?
Oh, it's at the highest of the highest score. I mean, I think Elon Musk, across the course of his career, has demonstrated that he can navigate companies towards the medium and long-term achievement of their mission. And so for Tesla, the most important thing to the company is not whether or not he's having a tiff with President Trump, but whether or not their robotaxi launch in June in Austin will scale to multiple cities by the end of the year and across the U.S. by the end of next year. And that's where most of the value of the company lies. So when we underwrite companies, we look at the 5-year underwrite, like what is this company going to be look like 5 years forward? And we think Tesla is, very roughly a 10x over 5 years based upon our research. And so the political drama is noisy, but it's not new. And we manage companies based on the fundamentals, not on headlines. And that's why we actively manage, because we can manage around this volatility. Disruptive innovation is by its nature volatile. And so we, of course, pay attention to and think about how this impacts our assessment of the companies. But
Well, I am curious, though. I mean, I know, we kind of make fun of the whole soap opera of it, and I understand that is the noise, and you are right. That does not necessarily translate into fundamentals and the bottom line. But when you start to hear the president or other officials in the White House talking about canceling contracts that whether it's Tesla or some of Elon Musk's other properties may have had involvement with, getting rid of EV mandates and other things that have been supportive of this company and its bottom line, I'm wondering when at all if you get a little bit nervous.
Yeah, well, across all of our positions, we have a thesis risk score, and we do raise that on the basis of, political vulnerability or vulnerability to regulation. The way we underwrite the companies is we don't assume that government subsidies are going to persist, because if you have exponential growth, then those subsidies become exponentially more politically costly. And so often they get pulled out from under companies just when they're relying upon them most. I think level the playing field for Tesla or for SpaceX or for Neuralink, and you will still have the best company in the world. There's a reason that SpaceX has the billions of dollars in contracts that it has. It's because it's the only company that can effectively deliver the launch services that not just the government, but commercial entities need. And so, yes, we have exposure to SpaceX, we have exposure to Neuralink, we have exposure to Tesla, and we believe in the long-term vision that he's espousing for those companies.
You mentioned robotaxis and Tesla and how that's really the future for the company. The question is whether the fallout with President Trump complicates the regulatory environment for those autonomous vehicles and then potentially slows the path forward for Tesla's robotaxi network. I mean, that is something that may be a factor in 5 years' time.
Sure, it's a fair point, and I think a global or a national kind of federal regulation on robotaxi would help not just Tesla, it would help Waymo, it would help any company that's trying to deliver autonomous vehicle services to the public. And so if that doesn't happen as a result of this, well, that'll hurt the American people, and it will pose the same headwind on Tesla that it does on Waymo and anybody else that tries to enter the market. So it does impact our, the adoption curve of robotaxi is really important to our underwriting of the company. And so if we had to reduce that adoption curve over time, then that would impact our 5-year point of view. Now, in our work, we actually thought there was only a 60% chance that they would launch robotaxi in this year. We thought it was a 40% chance next year. It's pretty clear it's going to happen this month. And so far, they've actually been surprising, at least in the near term, in terms of their ability to execute. And we'll see.
Yeah, I am curious, though, Brett, also just about the evolution of Tesla. There was a headline, a story on the Bloomberg terminal just a few minutes ago about the head of the Optimus, a humanoid robot program, exiting the company. And I am curious as to, again, this goes back to the idea of leadership and more importantly, management is probably a better phrase to use it. But do you worry at all that maybe you would have to adjust your bottom line estimates for the next few years if there is a material impact on that Optimus program?
Well, right now, we don't underwrite the Optimus program directly into our 5-year model. And in fact, humanoid robots is the technology area that has been really, we think, accelerated the most in terms of potential market impact by the acceleration in AI. As we're doing the work on humanoid robots and thinking about how that impacts Tesla, we'll, of course, take into account the current kind of velocity of the program. And just because somebody leaves, like Elon Musk is not an easy person to work for. I think we can all say that with some assurance. And it's because he drives people hard. He is not satisfied by, oh, we'll get this done 6 months from now. He wants it done within the next 24 hours. And that drives his team into a maniacal sense of urgency, which is what you need when you are trying to make a dent in the universe, when you're trying to really push something that's profoundly new into the economy. And so far, he's delivered.
So I hear what you're saying on that, and that's what the Elon supporters have made their case on. I'm curious because ARK Venture Fund also has a stake in Elon Musk's AI startup xAI, which represents about 2% of the fund's holdings. There's going to be a $5 billion debt offering coming in in the next few weeks, not to mention a funding round as well. Do you think demand for those offerings will be dented, affected in any way by this dust-up between President Trump and Elon Musk?
No. I mean, I think people who are trying AI tools are using them because they get profound productivity advances out of them. And by the way, this is true for car purchasers as well as people who are trying to loft satellites into space, as well as the patients who weren't previously able to talk and get Neuralink, put into their, attached so that they can communicate with the world.
Right. No, but this isn't users. This is investors, people who would be buying the debt offering.
Oh, you're worried that investors are not going to buy the debt offering because they think that Elon said a mean thing to President Trump.
No, because the relationship broke up.
Well, I mean, I think every relationship is transactional in some way. And I think that both Trump and Elon probably have, slightly misaligned incentives, but both have kind of a strategic vision for what they're doing. But no, I'm not doubtful that xAI will be able to raise capital on the basis of this dust up.